Hello guys, welcome to the channel. In today's video I'm going to be talking about price action strategy for trading reversals that really works. This strategy really works. If you're a beginner in forex or you've been trading and making losses, by the time you're through watching this video, definitely the result you get will change for good. Before I continue, if you're new to this channel, do consider subscribing and also turn on the notification bell beside it so you get notified anytime I upload a new video. So for some of you that doesn't know what price action is, let me just give you a brief definition of price action. You see, price action trading is based on technical analysis of price movement to generate signals of entry and exit in trades without the use of indicator. I believe you understand. So when it comes to price action, a price action trader has no need for indicators. The strategy involves candlesticks. Okay, now let me show you how this strategy works. First thing you need to do is to draw your support and resistance line. As you can see, here is my resistance line here on green, and here is my support line here. So once you draw your support and resistance line, anytime the chart is approaching, for example, let's look at this place now, the resistance point here. Anytime the chart is approaching your resistance point and you notice that the candlesticks is reducing in size, that shows there's every tendency the trend is going to reverse. So if you look at here, you see that these candlesticks are big. So when approaching the resistance line, you see that it formed smaller candlesticks before it now formed these red candlesticks. So even after that, you see that it formed a bigger candlestick here, formed a smaller candlestick here, before it now formed a red candlestick. So what you do is, once you notice this and you see that all the candlesticks, it was unable to break through the resistance line, that is when you go short. Then if you look at this support point here, another thing you need to watch out is when it gets your resistance line, must have upper and lower shadows. If you don't see shadows, it's also an indication that it might see break through. If you look at the candlesticks here, you see there's a lot of shadows. If you don't know what candlestick shadow is the little line above the body of the candlesticks. For example, this candlestick here, this is the body, that's the point that is thick. Then the shadow, the lower shadow is the tiny point below it, and the upper shadow is a tiny line above it. So once it gets your resistance line and you see that the candlestick bars are reducing in size, and when it gets to your resistance line, start producing a lot of shadows. Like here, you see there's this candlestick here produce a longer lower shadow. When the red candlestick started, it produced a long shadow too. This is an indication that there is every tendency that this chart is going to reverse. So that is what happened here. If you look at the support point here, you notice that when the chart was approaching your support line, you see that this is a big candlestick, then the candlestick became smaller with long lower and upper shadow. This is an indication that this trend might reverse. You see, when it got to the support line, it created another shadow before the bullish candlestick started forming, which is the green candlesticks. The bearish candlestick is the red one, while the bullish candlestick is the green one. Once the bullish candlestick start forming, that's when you open a buy position. So if you look at here again, this point again, you see that before it got to this support line, you see there's a big candlestick here, a smaller candlestick here, a very tiny candlestick here. This is an indication that this trend is about to reverse. Once you see this candlestick, that's where you enter here, the bullish candlesticks, which is the green candlestick, that's when you enter. When you get to this point again, you see that when it was approaching the resistance point here, you see that it formed a big candlestick, a smaller candlestick, a very small candlestick. Once it forms this bearish candlestick, that is when you enter. Each strategy is an indication that the trend is about to reverse. So that is how you trade this price action. It's a very simple strategy. What you just need to do is draw your support and resistance line and watch out for this price action to take place. Remember, once this happens, if it's not approaching your support and resistance line first, and this happens, just forget about it. Don't be in a hurry to place trade because you want to make money. It's better to wait than to be sorry. One thing with trading is there is no guesswork in trading. Monitor the chart. Once the price action you're looking out for is there, then you hit your trade. This is pan Japanese, so let me open another asset to show you that this price action always occur and it happens in all assets. So once you see this price action happening, then make your entry. So let me check other assets. So this is another example. This is euro card. So if you look, this is my resistance line and this is my support line here. So if you notice, while the trend was approaching my resistance line, you notice that this candlestick here is big, then this candlestick here is smaller, this one is even smaller. Once the shadows start becoming longer, it's a clear indication trend is about to reverse. So once the bearish candlestick appears, that's when you place your trade. So that is how to profitably trade the market and improve your trade results.